Kevin. How are you?
Great to be here. Thank you. Well, I was listening to you before we got together on the show, talking about the chips, and you're right. There's a fundamental change going on in the economy. So I care a lot about AI and how it's going to add productivity to all 11 sectors of the S&P. But none of that's going to happen without data centers. And so the other aspect that I'm playing into on the Phoenix, if you look at what they do, these guys are data center guys. And why are they so big in data centers? Because they're one of the largest miners of Bitcoin in the world. That's what you don't know about Phoenix. They're probably number one now globally. They operate in almost every continent. But in building out these data centers, you have to become really strong at understanding the infrastructure of what it takes to have an AI data center. And because of the Ukraine war, and this is a very interesting theory, but I'm backing it with my dollars, is in the old days, if you're a General Motors or the IRS or you're an American bank, you didn't give a damn where your data center was. You just wanted low-cost electricity. And that was the Ukraine. Their hydro was the cheapest. They had all kinds of data centers. Then you got the Putin tanks rolling right over data centers, and everybody wakes up and goes, yikes, where are these data centers? So now in the US and in Ireland and in Canada and the United Arab Emirates and in Switzerland, France, everybody and every sovereign government wants their own data center on their own sovereign soil with low-cost power. And that's what Phoenix does. There's another company over there, too, called G42. And what you should know about the UAE, and I'm learning more about this place every time I go over, they own, and Mubadala, the chair of Mubadala, is on the board of Global Foundry. Those boys own 20% of Global Foundry, the third largest chip maker in the world. So they can make the data centers anywhere they want. So if you're in North Dakota and you want to build a $1.2 billion data center for the IRS in North Dakota, which is where one of the safest states in the union is, you're going to have to get the chips, and you're going to work with companies like Phoenix and G42. And that's where I'm betting. I'm betting over the next 2 years that every guy and his dog in every state is going to want a data center there, because they want the security of where that information is, and they want to know it's safe, and it's in a place where no foreign entity can run a tank over it.
Oh, now you're speaking the language we like. I love that. I actually own some Global Foundries, and I wasn't even aware that they were a shareholder there.
It's a great point you're making there, but the issue around China is trying to peg next year's 2024 growth rate. What's driven GDP growth in China over the last 10 years, when it was well north of 5 and 6%, was real estate. Now that sector's crapped out in China. You've heard of the empty buildings built all over the place, and that's where so many jobs were created. And there's a major correction going on in real estate because they're not immune to the cost of capital all around the world. So if it's not going to be real estate that's driving Chinese growth, what sector is it going to be? Well, they established their economy decades ago as becoming the low-cost manufacturer. And that was the place to go until all of this tariff war started. And so now you've got a situation where even Apple and some of the largest behemoths are starting to say to themselves, wait a second, I have to diversify my supply chain risk. Maybe I got to go to Taiwan more, even though China's threatening them. What about Cambodia? What about Thailand? What about the Philippines? And so that's not pro-growth for China. And I don't think either Biden's administration, if he wins again, or if Trump gets back in, are going to change the tariffs. The real issue for China, and I still own a bunch of Chinese stocks that trade in Hong Kong, is they have to get up to speed on IP law. And they've got to become a global citizen that plays by the rules, because they're not. They're getting threatened to be kicked off the NASDAQ and the NYSE if they don't abide by the accounting systems. That's coming. China has to play by the rules, including allowing litigation on IP and everything else. And I think they're slowly getting the joke. I'm optimistic that at some point, because they only understand the stick, and they've been getting the stick from everybody. And I think that's when you're under a 5% growth rate and you've got billions of people to worry about.
It's a problem.
And you're the dictator, supreme leader forever. You got to sweat riots in the street, and you got to keep people employed. So I think we're going to do okay there, but that's not going
Okay.
to decide market direction, in my view. It's not going to be China. That's already baked in. I want to point something out because you've been very good at looking at this broadening out. And you guys talked about it was Magnificent Seven only, and now we've got a broader base of the S&P participating in the market move up. But let's not forget the Russell 2000. Had you seen the action there in the last 2 months?
Kevin, I mean, the IWM right now is definitely outproducing. I'm going to put a chart up right now, and thank you for calling that up. This is one of the names that I think has a great chance to go up even further. It's definitely lagging behind the NASDAQ and the S&P. I mean, here's a weekly chart. We're nowhere near. We just saw the S&P the other day touch the top. We saw the NASDAQ breaking through all-time highs. Great call on this one. You still need 20% until you get back to all-time highs of IWM. And then, Kevin, with rates, obviously, it looks like the rates are coming back in, so that would be good for small businesses. I also like the healthcare sector leading into 2024 as, of course, population, that's never changing. It only seems to be going higher. So we like the healthcare sector as well.
Look, you know, if you're going to have a position, even if you have some Rivian, and you're just trying to get a weighting across EVs, your largest holding still has to be Tesla because they're the low-cost provider. They also have access to the lowest production cost of batteries. And they've got this massive internet distribution of power at charging centers. Even GM and Ford eventually have to standardize on their distribution center. Everybody's figuring that out. So as the price of these things come down, you still want to be with a low-cost provider. Now, I understand Elon Musk is a controversial dude. Everybody knows that through the whole Twitter X thing. But at the same time, the guy's a genius. I'm
fine with that. I'm fine with that.
And I can put up with all the craziness because I watch what this guy's doing globally, and he's killing it. And I love the fact he just shrugs off his, critics. He just doesn't give a damn, and that's what it takes to be successful today. So I would say Tesla is probably a good long-term hold if, as you pointed out wisely, you can stomach the volatility because it's vol like crazy. So, you don't want to have over a 5% weighting in a book in one name because it's going to add a lot of vol to your holdings. And one other thing, going back to that mid-cap play, I'm thinking the reason mid-caps have really moved in the U.S., we're talking Russell 2000, is the fact there's a 50-50 chance Trump gets back in, and that's going to be a much less regulated environment. Less regulation affects domestic companies, and most of the ones in the Russell are 5 to 500 employees. Now, I'm using an ETF called OUSM, owned by Alps, because they filter out all the dog crap out of the Russell 2000, because half the companies don't make any money. They just own the ones that do in OUSM. So you get less vol, and it pays a distribution. Because who's going to guess on 2,000 names every quarter? That's what you got in the 2,000. But it's my play. That's what I'm using.
Kevin, just one question on that OUSM.
Days there.
Is it just about profitability? Like, is that the number one overall metric that you're weighting out there? Or do you also look at some other growth metrics? I'm just curious for myself.
No. It's factoring on quality. It looks at leverage. What you really want in a company is if they're paying out dividends or distributions, and every month they're just borrowing money to do it, you don't want to own that name.
Right.
You want companies that have sustainable business plans. The filter system in OUSM is the same as OUSA, and I've owned these as core holdings. OUSA is a subset of the S&P 500, and it takes out the crappy names there too. I don't want to own Boeing when it's going through, massive debt restructuring and yada, 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 yada. And every day it's an executional issue and when's the CEO changing and all that stuff. Not that it's a bad company. It's just I don't need to own that to get the index to work for me. So it filters out all the risky stuff. Same thing with the Russell 2000, the USM. And I'm owning the pure gold in my view. So, it's sort of, I don't like to own companies that don't make money. I think you guys know that about me. I'm all about the cash flow.
Oh, no, Kevin, you just ruined it. I was going to say last time we had fun and you made me say cash flow is very, very key. So,
well, that's how you should say it. It's all about the cash flow.
That's right, baby.
It works. And I'll tell you, 2024 is going to be because rates are probably going to stay at 5.5 terminal rate. Everybody's thinking, that the Fed's going to lower it in March. I don't think so. I think they're going to kind of wait till they get the real 2% inflation, particularly in food. We are in an election year. They won't raise it anymore, but they're not going to drop it down as fast as people think. So you got to kind of think your names in a 5.5% world, which means a 7% mortgage, an 8% car loan. But that's baked into the market right now. And the U.S. economy continues to do quite well. And I'm hoping, and I'm sure everybody's hopeful, that, you know, we're going to resolve this Ukraine thing at some point, and certainly we want to resolve what's going on in the Middle East. That's a horrible situation for everybody involved. And these things could be, you know, I think stimulus for markets around the world when they get resolved.
Kevin, I need to thank you again. We've gone well over time. I want to thank you for your time as well. And again, you know, I think you've provided a lot of information to all of our viewers. And thank you so much. Back to Sharif, is that what you want to do? Okay, Kevin, thank you so much. Promise the next time you're in and around Toronto, you'll come back in.
I love it. I'm going to bring in more people. I'll be wearing 4 watches by then, 2 on my ankles.
Oh, at this
I'll
rate,
come in.
8.